For savvy shoppers with a nose for a luxury bargain, Japan is proving hard to beat. For more, let's bring in Asia investing reporter Lisa Du in Tokyo and Bloomberg Intelligence senior analyst Ada Lee in Hong Kong. Lisa, let's start with you. I mean, we're seeing all kinds of deals in Japan. We know that the Japanese have been gravitating, descending on Japan to get those bargains. You got to wonder how long that will last.
Yes, definitely. I was just in Ginza the other week, which is, one of the luxury shopping districts in Tokyo, and it was full of tourists from the U.S., from across Europe, from across Asia, all hoping to get their hands on some luxury goods. They've discovered that basically with the yen being so low and with their ability to shop duty-free without tax, they're able to get lots of savings on anything from Hermes scarves to Chanel bags to Cartier bracelets. And it's certainly, I think, for them, it's a very good sentiment right now because they're holding much stronger currency than the yen, able to shop.
That's right. And in terms of LVMH alone, I think it saw its Japan sales rise 30% when the other parts of Asia actually saw a decline in sales. And Ada, at the other end, we're also seeing big demand for discount stores minting billionaires in Asia. I mean, talk to us about it. And will this trend last?
Absolutely. So in terms, when you look at the LVMH and the luxury shopping, it is mostly for international travelers. But for the Japanese people themselves, when they're in that country, with the persistently high inflation that they're experiencing, it is quite tough on their wallet. So what we're seeing is some Japanese retailers actually refraining from upping the selling prices just because they're scared to scare people away from the shops. And with the inflation, people need to be mindful of, where they're spending. Are they spending on consumer staples where they need to, feed their families and also just keep a family running? Or will they have sufficient extra cash to spend on luxury? So it is one of these questions that we think, with these discounting stores, probably is going to stay for a bit longer because people are looking for more value for money.
Hi, Lisa. I've got a question about the yen. So obviously the weakness of the yen has attracted a lot of people, as you say, coming into places like Ginza. Do you get any sense at which point maybe they wouldn't want to come to Japan? We see dollar yen around 154, but let's say we went down, say, to 130. Would that make Japan too expensive for foreigners?
To be honest, I feel like even at 130, it'd still be quite attractive because you're thinking about, how it was before the COVID, where dollar yen was about at 110. So right now it's at 30-year lows. They're getting almost a 40% discount compared to before when the yen was much stronger. Even if it went to 130, I do think that demand to come to Japan would still be quite strong.
And Ada, we're seeing a lot of competition from Chinese platforms, e-commerce platforms. How is that playing out?
I think that's always a tricky one to navigate because with the e-commerce platform, we are seeing a proliferation of cheaper goods for the people in the country. And in Japan, say for example, with the constraint in spending powers given the persistent inflation, we do think that people will increasingly utilize various platforms and various channels to get cheaper goods.
So, Mark, in the end, when you take a look at currencies, where do you think Asian currencies will be headed by year end if there is no rate cut? And increasingly, we're talking about no rate cuts for the year.
Well, the way in which the central bankers and the finance ministers are really stepping up their verbal intervention suggests that they are losing patience and that they're getting very close to drawing a line in the sand. The way that Janet Yellen speaks as well is not going to stand in their way. So we're probably reaching a point, even if the Fed doesn't change interest rates, somehow the Asian countries are going to take it into their own hands. What we may see is a few Asian countries at the same time buying their currency. That'll be quite effective to see several move at the same time. Traders would take notice of it. So we're probably reaching a point where they can't stand it much more. They're going to take it into their own hands. Once that happens, once they stabilize the currencies, you probably start to see some improvement. So you would expect Asian currencies will end the year in a stronger position than where they are now.
Lisa, you get the final question. I mean, I'm looking to go to Japan, of course, but we know that when it comes to luxe brands, they tend to equalize the prices. Are they likely to do that?
Yes, like you said, these big luxury brands are also quite savvy, and they do want to equalize prices globally to kind of prevent these luxury arbitrage opportunities. However, what you're seeing with the yen is that it is fluctuating. Keeps getting weaker. The volatility is, there's a lot of volatility. So if you are a very savvy shopper, you're here in Japan at the right time, holding quite stronger currency, you are able to score very good deals. One product, just to give an example, that we looked at was a Tag Heuer watch. Usually retails for about $6,500 in the U.S. In Japan, you can get it for around $5,000 here. Getting savings of more than $1,000 here. So it is quite a good deal right now in Japan.